I would like to welcome every one of us to today's meeting, 30-minute interactive session with Grace Ujo. I really appreciate your consistency. I really appreciate those of you that have been following me since we started this program. I want to say a happy new month. This is a new month, the month of November. I wish you a successful and a peaceful month of November to remember in the name of Jesus. So I want to welcome you once again to this program. Last week we talked about the 5 benefits that the insured enjoy from adequate insurance underwriting. Then we discussed the 5 benefits as equitable premium, adequate cover, commensurable claim, asset protection, and peace of mind. I want to discuss with us today 5 stages of conditions in insurance contracts. Just like we all know that every contract has its terms and conditions. Every contract. But over my years of practice, I always hear people that insurance, they have come with their conditions and all that. I want to believe that at times you are scared of insurance conditions simply because you don't actually know what these conditions entail. The question I would have loved to ask if I have so many people in the room this evening would have been that if you are embarking on a project, I mean, at times you have this fear of will you be successful or not. You know, there is this element of fear in us when we are embarking on a new project, on a journey, on whatever you are doing for the first time. There is always this fear. And why is this fear? It's because you don't really have the understanding, maybe you don't have full understanding of what you are going into. Whatever you don't have the knowledge of, you tend to be, there's that tendency for you to be afraid if you are not so sure of what you are going to face in that journey you want to embark on in that project you want to embark on. So the same thing with insurance conditions. People always say, insurance have come with their conditions. It's because probably you don't really understand what these conditions are. And that is why this program has been, that is why this program is out to bridge the knowledge gap in the insurance industry. So today we'll be looking at the 3 stages of conditions in insurance contracts. And what are these 3 stages? We'll be discussing the conditions precedent to the contract, conditions subsequent to the contract, and conditions precedent to the liability of the insurer. I will still want to leave room for questions, so we may not finish all the conditions today because I want us to have full understanding of what these conditions are. So this evening, I'll be starting from the first condition, which is conditions precedent to the contract. Now, let's look at these conditions. These are, we're going to look at the age, insurable interest of contracts, full disclosure of material information, payment of premium, acceptance of the contract, and delivery of the contract. So I want to start from the first one, which is age. How do I mean, or what do I mean by age? Just like we know that in every insurance, in Nigeria, the contract law helps, we all understand from the contract law that a minor don't go into a contract. You cannot have a valid contract with a minor. So also with insurance contracts. Insurance contract is not an exception. If you want to go into an insurance contract, you must be of age. The insured, by now we all know who an insured is. The insured must be of age. At least the minimum age is 18. If you are less than 18 in Nigerian law, you are a minor. You are regarded as a minor. The minor cannot go into, you cannot enter into a valid contract with a minor. So also in insurance, the insured who is coming to a contractual relationship with the insurer must be of age. The minimum age is 18. Now let's move to the next one, which is insurable interest. You will recall when we were discussing the fundamental principle of insurance, we talked about the insurable interest. We said the insurable interest is the legal right of the insured to insure the subject matter of the insurance because of the financial interest he has in the subject matter of insurance. So one of the conditions precedent to the contract is that as the insured who is coming to insurer to have a contractual relationship with insurer, you must have an insurable interest in that risk you are bringing to the insurer. In that risk, you want insurer to cover for you, because those who have a relationship with insurer, it means you are into a contractual relationship. So there must be an insurable interest in that risk you want to cover. That is, you must be the owner of the risk or the custodian of the risk. We have discussed all these ones in our previous meetings. Now, I want to talk about offer to the contract. Before there can be a valid contract in a normal business contract, there must be offer. So also in insurance contract, it's not the insurance contract is not an exception. There must also be an offer to the contract. Now, for instance, if you want to insure your house against fire, if insurance company does not have insurance fire policy, there's no way there can be a contractual relationship. So there must be an offer to the contract. So the insurer must have the offer, and before you, the insured, must say, okay, you want to accept the offer. So that is offer to the contract. Just like you have it in a normal business contract, so also you have offer to the contract in insurance contract, and it is one of the condition precedent to the contract. Now we also have the full disclosure of material information. You also recall during the time we were discussing about the fundamental principle of insurance, we talked about the principle of utmost good faith, and we said this principle confer a duty on the insured to disclose the full to disclose all material information about the risk it's bringing to the insurer. So full disclosure of material information is one of the conditions precedent to the contract, because it is expected that you, the insured, who is bringing the risks to the insurer, you are the owner of your risk. You have the full information about your risk, and the onus is on you to have the full to disclose the full material information about the risk you are bringing to the insurance. So full disclosure of material information is also part of the conditions precedent to the contract. Then we have payment of premium. Payment of premium, I mean, just like we have a normal business contract that there must be consideration. Payment of premium is a consideration, just like you have it in a business contract that there must be consideration. Please let's mute our mic, please. So there must be payment of premium. So that payment of premium is like the normal consideration you have before you can insure, before you can have a valid contract. So also in insurance, you must pay your premium before you can have a cover, because insurance operates on a no premium, no cover. So I also want to talk about the acceptance of the contract. The acceptance of the contract. This acceptance of the contract can be in two forms. The insured need to accept the contract, and the insurer to need to accept the contract. How do I mean? I will explain. Now, on the part of the insured, the acceptance of the contract is by the time the insured pay the premium, it means he's already to go into that contract. And by the time the policy document is released and the insured go through it, insured still have the option to decline if he's not satisfied with what he has read in the policy document. So on that note, but by the time the insured go through it and just is not making any comment, it means he's satisfied with whatever the policy conditions are saying. So the insured accepts the contract. That's on the part of the insured. And on the part of the insurer may decide, because the definition of underwriting, we say underwriting is the process of examining the risk that is being brought to the insurance. Underwriting process is the process of examining it, and the prudent underwriter will look at it to see whether he will accept it or he will decline it. And if he will accept it, under what condition will the underwriter accept it? So on the part of the insurer might look at the risk that the insurer is bringing to the pool and look at it that this risk is not acceptable, and the insurer might decline the risk, might not underwrite it. So if there is no acceptance on the part of the insurer, there cannot be a valid contract. And also, if there's no acceptance on the part of the insured, there cannot be a valid contract. So on the part of the insured and insurer, there must be that consensus. There must be acceptance on the part of the insured and on the part of the insurance. So the last condition, under condition precedent to the contract that we'll be discussing this evening, is delivery of the contract. You see, just like you have in every other business contract, there must be delivery. For a contract to be valid, the contract must be sealed, stamped, and delivered. Just like when you enter into a shop that you want to buy something, once you have made the payment for the goods you are buying, the goods will be delivered to you. Also, in an insurance contract, there's always delivery of the contract. By the time all the conditions, we call this condition precedent to the contract, we call it underwriting contract. So by the time all these conditions accepted, good evening, madam. Thank you for joining us. By the time please mute your mic, please. Thank you. So by the time everything is done, the insurer on the part of the insurer have accepted the risk, the underwriting is completed, there is delivery of the contract, and it is evidenced by the issuance of the policy document. In insurance contracts, the delivery of the contract is the issuance of the policy document. So once this is delivered, it means there is a valid contract. The delivery of the contract seals the validity of the contract. So for there to be valid contract in insurance terms, we have conditions precedent to the contract. We call this underwriting condition. So once you have all these conditions that have highlighted, there is a valid contract in insurance terms. So we're next to hear of condition. So just like I have said, I'm going to discuss the three conditions in insurance contract. I said the first one is conditions precedent to the contract, conditions subsequent to the contract, and the conditions precedent to the underwriter's liability. But because of our time, because I call this program is an interactive session. I want us to really understand this thing, and I want to give room for a question now, because the purpose of this meeting is to bridge the knowledge gap in the insurance industry. A lot of time people are scared about insurance because they don't understand what is going on. And we all know that when you are information brings transformation. And for the insuring public, if the insuring public, if they are well informed, there will be a paradigm shift in the perception, in the insurance perception in Nigeria. So please, I want to give this time out. We can continue this program, this presentation next week. But because it is just 30 minutes interactive session with Presidio, I want to leave out this time. Let's ask questions on the stage 1 condition that I have said, that I've discussed this evening, which is underwriting condition precedent to the contract. So please, if you have questions at this time, please unmute. You can raise up your mic. You can indicate by raising up your hand or unmute your mic and ask your question. Thank you very much. I'm waiting for questions. Question, please. Should I continue? If there is no question, should we continue? Please, I need response in the room. Peter Debola, please ask your question, sir.
Okay, good evening, ma'am. Thank you for the wonderful presentation. And thank you for educating us about conditions precedent to the contract. But the question I want to ask is that based on what you highlighted here, you highlighted about 7 conditions precedent to the contract. Now, the question I want to ask is, what can render insurance contracts invalid? Assuming somebody meets all these conditions precedent, what are the conditions that can make the insurance contract invalid after the contract has been signed between the insurer and the insured?
Okay, thank you very much, sir, for that question. Just like I said, it's just because of my time. That's why I cannot discuss the 3 stages of the condition. But from these conditions precedent to the contract, if these conditions are met, then there is a valid contract. If the age is there, the insurable interest is there, all these conditions, if they are met, there will be valid contracts between the insured and the insurer. I don't know if I've been able to answer your question, sir. Have I been able to?
Madam, can I add a few words?
Okay, sir.
Good evening.
Welcome, sir, for joining us on this.
Let me appreciate you for the good work you are doing.
Thank you, sir.
Some of it, that's very good. And Mr. Peter, thank you for that question. That would have come under another heading, but for this, let's try and answer it.
Okay.
Yes, these conditions are condition precedents, but some of the things that can vitiate a contract is where there is concealment.
Concealment. Okay, sir.
Concealment. Where the insured has not disclosed all the material facts or has misrepresented the facts.
Okay, sir.
That could be where the insured is not of majority, that is underage. If the premium has not been fully paid, the same thing will happen. Okay. And again, where there are warranties stated by the underwriters, and those warranties have not been met before the commencement, that you have to put this, you need to have fire extinguisher or sprinkler leakage, all these things have to be installed before the contract can commence. And all these have not been done, then the contract will not be valid. So these are some of the things where the premium is not fully paid, because the premium is the consideration, and the consideration has to be fully paid. That's the provision we have in our law. Payment of full premium is the condition precedent to having a valid contract. So these are some of the things. And again, here there is no insurable interest. Where somebody has presented another person's property for insurance. It's part of misrepresentation and what have you. All this can vitiate the contract.
Thank you very much, sir.
Thank you.
Thank you, sir. Yes, it's just the, oh yes, I really appreciate the contribution of my guy in the industry, Mr. Fatai Adigberu. Just like what I have listed, I believe it's just when when all these ones are not met, then there won't be valid contracts. Mr. Peter, I hope your answer has been well, your question has been well answered, sir.
Yes, thank you very much, madam. And I would like to appreciate Mr. Fatai Adigberu. Yes, the answer given and what you said, they are very good. Thank you very much.
Thank you very much, sir. Do we have another question in the room? Because okay, Ofonime. Oh.
Yes, it's not really another question, it's a clarification on this same issue. If you recall, I asked a particular question sometimes ago on this same program, the responsibility of the insurer before the contract is being signed. Like the example that Mr. Fatai quoted now, I am expected to have something like a fire extinguisher in my car and I did not put it in place. Is it that at the point of signing the contract, all these things not vetted by the insurer before signing, or after signing, at the point of redemption, you start asking the question, was the fire extinguisher there? I say no. And you now say contract. I need to understand, how does it go? Is it at that point that you vet and then you now tell me no? Or from the beginning?
Hello.
Hello, can you hear me?
Yes, I had disruption.
Okay, so what I'm saying, is it from the beginning that we confirm that all these conditions are met before we go into this contract? Or is it like a continuous, like the fire extinguisher is supposed to be permanently there? Maybe I remove it. I think all these clarifications are being required. Thank you.
Okay, sir. Please, Mr. Fatai, I want to give you the floor, sir. Mr. Fatai. Hello? Okay, maybe.
Yes, please.
Okay, sir. I want to give you the floor to answer in her, sir.
Okay, thank you, Madam Mofia. That was a very good question. Although the line was breaking,
yes.
Let me attempt to answer.
The line is breaking. Hello, sir.
The conditions, fundamental factors of insurance when it is the utmost good. Yeah, is the line clear?
Yes, sir. I can hear you.
Are you with me? Hello?
Hello, sir.
Hello, madam.
Hello, sir. I can hear you.
Madam, are you with me?
I'm with you. Please,
we can hear you, sir. Go ahead.
Okay.
Are you hearing me?
Yes, we can hear you.
Yes, we can hear you.
Yes, we can. We can.
Hello?
We can hear you, sir. Okay.
Am I on?
We can hear you. We can hear you.
Oh, okay. Yeah, I'm on.
Okay, it's like, maybe, can you all hear me? It's like Mr. Fatai's line is breaking. I want to answer that question. Please, can you hear me?
Yes, we can hear you.
Okay.
Yes,
okay.
we can hear you.
Okay, let me answer the question. Just like, yes, I remember you have once raised this question before. Just like I said, when you are when you want to go into insurance contracts, we have the intermediary, which are your brokers or consultants. When you effect an insurance cover through the professionals, your professionals will guide you appropriately on what to do.
Yeah,
And
the problem.
okay,
Yeah,
sir.
but the
Hello, sir.
are you through, ma? Can I continue, ma?
Yes, sir. Please, you have the floor, sir.
So the both parties are expected to lay the card straight on the table. There shouldn't be any concealment, and they have to be open. The insured disclose all the material fact at his disposal. The underwriters are expected to state all the extent of cover being provided, and where certain conditions have to be met before they go on risk. They have to state it, and in practice, they're supposed to ensure that those that you are installed are on before they commence cover. So when all these are done, there won't be any problem. But where the underwriter fails to carry out inspection and goes on risk, and there is claim, he cannot hide under his own fault to decline liability, because he has the primary responsibility to ensure that those things are on if it is contained in the contract documents, and the documents that evidence the contract between the underwriter and the policy document. So if it is survey before going on risk, he cannot repudiate liability. So there's a provision of the law that protects the insured in that regard.
Afanime,
Thank you.
please, do you understand the answer? I know the lines are breaking, but has your question been adequately addressed?
Yes.
Thank you very much. Thank you, sir, Mr. Fatai Adegberu, for your contribution. So actually, just like I told us that this is an ongoing program. I decided to choose the conditions. I know we will still talk about warranties. We will still talk about clauses. We will still talk about a lot of things. We are taking it gradually. I've chosen to talk about the conditions today, but I really appreciate those that have even asked the question. I mean, that is the essence of this program. I mean, to bring us to the full understanding of what insurance really is. Because if we are well informed, just like I said, we'll be well transformed, and there will be a positive paradigm shift in our perception towards insurance in Nigeria, or towards the insurance industry in Nigeria. It is just 30 minutes interactive session with Presido. By my time, this is past 6. Please, I want to encourage us. Let us always log in by 5:30 on the dot.
Ma, before you close, ma.
Okay, sir.
But ma, may I give some advice before you round up?
Okay, sir.
I want to advise the participants and all prospects or insurers to endeavor to engage the services of registered insurance brokers. It's free. It will go a long way in protecting your interest, safeguarding you, getting better terms for you at reduced prices. So you just need to get a registered insurance broker to do all this work for you, and you go to sleep. So thank you, ma'am.
Okay, sir. Thank you very much, sir. That is what I always emphasize, so that your professionals, when you engage the services of your professionals, you will be your interest will be adequately covered or adequately protected. And that is what we also do at Bimbo Consultancy Services. So we are professionals also, and we will ensure that all these things are well taken care of. When next you want to go into insurance, kindly reach out to us. So before, just like I was saying, our time is up. If you have any further question after now, you can always reach out to me, or you can reach out to us at info@bimboconsultancyservices.com. So just like I was saying, that please, I want to encourage all of us, let us always log on at the dot of 5:30, because it is just 30 minutes. Once the 30 minutes reach, I'll begin to receive signals that I should round up. So please, once it is 5:30, let us start the program. And there's always recorded version of every segment of this program on my YouTube. Kindly, anytime I share the YouTube, please help me reshare it. Help me subscribe to the YouTube. Let this information go viral. The purpose of this program is just to ensure that we all come to terms with the benefits of insurance. Just like we saw last week on what insured start to enjoy, the benefits the insured have. When you have adequate insurance underwriting, when you have adequate cover, you go to sleep. That is the purpose of insurance. And insurance companies, they are in business for two things, just two things, for underwriting and for claims. Any insurance company that is not settling claims, they are not in business. So I want to encourage us to always log on by 5:30. I want to appreciate everyone that has joined me on this program. I really look forward to seeing you next week, same time, Wednesday, between 5:30 and 6 p.m. I really appreciate everybody. Thank you so much. Do have a wonderful evening. Thank you all.
Okay, madam. Thank you. Well
Thank
done.
you. Thank you,
Thank
sir.
you.
Thank
You
you,
have a
sir.
good evening as
Thank you,
well.
ma.
Bye-bye.
Thank you, everybody. Thank you so much. Looking forward to seeing you next
Bye.
week. Next week, same
Good
time.
job.
Yes, thank you.
Well done. Good job.
Bye-bye.
Thank you.
Bye.